Hello students, this is Mustafa Mirchawala from Mirchawala's Hub of Accountancy. Today we are going to discuss the orientation of F6 EX, that is ACCA paper, right? Before we move on, let me share something about me. I've been teaching for last 18 to 20 years now. And I not only teach this paper F6 TX, but I also teach F3, which is FA. I also teach F7, which is FR, Financial Reporting, SBR, Strategic Business Reporting, and also ICW, Corporate Reporting. And also our institute, Mirchawala's Hub of Accountancy, offers all papers of ACCA, ICW, CFA. We offer all these qualifications, right? Just for your motivation, let me share you some of our results, because there are many students, those who scored not only nationwide but also worldwide positions our students scored, right? So these are few of our recent high scorers of F6, and in this list there are some students who scored positions, right? Okay, now when they can produce such a good results, you can also do it, right? Now about this paper F6 TX, this TX stands for taxation. Now the papers of first of all, what's the average global pass rate of this paper? The average global pass rate is around 48, 49, sometimes 52. So that's why I have written 50%. 50% is the average pass rate of this paper, and which is very good. You know, in applied skills module, there are some papers they have only 38, 37, 40% pass rate. So 50% is one of the highest pass rate. Like F6, F7, these papers have got the highest pass rate, right? That's why it is recommended to opt these papers first. Why it is recommended to opt these papers first? Because when you opt those papers which have the highest passing rate, so there is automatically the chances of passing that paper is high. So first you should opt those papers with higher passing rate, then you should go towards the paper which with low pass rate. Okay, so in this way you can get a motivation, Now what course material will follow? The course material, very simple. First of all, MHA book, which is my own book, right? And I'll provide you this, I'll provide you the PDF of that book. You can take the printout. The second is you need to buy Kaplan exam kit. Kaplan exam kit is a must thing, right? Okay. And what about the study text? Kaplan study text is optional. If you want to read, you can. Otherwise, if you're running short of time, so no need. My book plus Kaplan exam kit is more than enough. But I don't stop students from reading study text. Yes, if you have a habit of reading study text since the beginning, then carry on with that habit, no issue, right? Okay, but these two are the compulsory thing. My book, MHA means Mirchawala's Hub of Accountancy, our institute book, and the second is Kaplan exam kit. These two things are very important. Now regarding the paper format, see, this is the paper format. Now many of you have just come from the AFD, right? That FIA route, or that means there is a possibility this is your first paper. There is a possibility this is your first paper of applied skills module. So let me share the paper format. You know that normally there are 4 windows in a year. These are session CB, not on demand CB. These are session CB. So only 4 windows in the year: March, June, September, and December attempt. March, June, September, and December attempt. Okay, and now this is the format. You will have 3 sections in the exam: section A, section B, section C. Section A contains 15 MCQs at the rate 2 marks each, so it's 30 marks. Now the question is, sir, from where these questions will come? These questions will come from any area of the syllabus, any area like CGT, IHT, corporation tax, individual tax, any area they can come, right? Okay, now section B, MTQs. You will have 3 OT cases, or you can say MTQs cases of 10 marks each. Now what is MTQ? Hope you remember, you have given the previous F3 paper or F2 paper. In F3, hope you remember, there are the last section is 15 marks, 2 questions, 30 marks, 15 marks, 2 questions. And in that you will have a detailed discussion. First of all, you will have a story or discussion, and then you have 5 MCQs related to that story. So now here you will have 3 OT cases. And in each OT case, you will get, first of all, you will have a story or discussion, and then you will have five MCQs related to that story. So now just think about it. There are 3 OT cases of 10 marks each. And what is one OT case? In one OT case, you will have 5 MCQs, 5 MCQs or 5 blanks at the rate 2 marks each. So automatically 10 multiplied by 3, this is the 30 marks weightage. Now, the next question is, sir, from which area these three OT cases normally comes? Normally, this area comes from VAT, this is value added tax, IHT, which is inheritance tax, and CGT, chargeable gain tax, capital gain tax. Normally, these 3 OT cases, this is the past behavior of examiner. These 3 OT cases comes from these 3 areas: value added tax, inheritance tax, and CGT, capital gain tax or chargeable gain tax. Now, the last area is section C. This is constructed response area. Now, my dear student, in first 60 marks, there is no presentation. You just have to take. There is no presentation. There is no typing at all. But yes, last 40 marks, this last 40 marks, you have to work on proper software. Now, many students think that it is proper Excel. No, this is not Excel. This is just spreadsheet. This is just spreadsheet. In a spreadsheet, my dear students, you just need, first of all, you need typing. You must know the typing. Then you need the sum. You need how to apply the sum function, subtract function, multiplication, and division. If you know these things, you can easily work on this last 40 marks. So it's not a big thing. Plus, in our classes, in my classes, I'll also show you how to do it. I will also practice this thing, right? Okay. So now, in the section C, it's 40 marks section, because obviously first 60 marks, there are 2 sections, section A and B. So in section C, you will have 3 questions. The first one is 10 marks, then 15 marks, and then 15 marks. This 10 marks normally comes from tax planning area. This 10 marks normally, this is the practice of examiner, but yes, examiner may change it, right? It normally comes from tax planning area. Now, what is tax planning? Tax planning is a very interesting thing. For example, I have to start a business. So I have one option that I start the business with my own name, like a sole trader. So everything will be on my name, individual name, right? Second option, I can start the same business with the name of a limited company. Let us say I incorporate a limited company and I become the shareholder of that company. So now that business will run with the name of company. And now, yes, I will have to apply corporation tax rules as well. Okay. One more example. Now, let us say I have started the business with the name of company. I have started the business with the name of company. Now, how to extract funds from that company? The first option is I may become the shareholder of that company. And now, as a shareholder, I can extract funds. I can extract funds in the form of dividends. Yes, this is the first option. Second option, I become the director of that company. And yes, the directors are employees of that company. And now I can take out salary. I can take out funds from that company in the form of salary. So see, there are different options. So we have to decide, and we have to go for the best function. We have to decide, and we have to go for the best function. We have to go for the best of the best function, right? And it's very interesting area, 10 marks. The second area in section C is corporation tax. About companies. If, let us say, a company is doing business, a company is earning trading income, a company has different properties, so companies might be earning rental income, or company has different investments in stock exchange and other. So company may have capital gains. So you will have a complete scenario of companies of 15 marks. Okay, right? Plus you will have some area of group of companies as well. Group of companies like parent, subsidiary, fellow subsidiaries. This type of things may also be examined in the exam. But this is a good area. Finally, question number 3, again 15 marks, but it's about individual income. Now use your brain. Individual can go for job. Yes. So if an individual is going for job, so that individual is earning employment income. that individual is earning employment income. So in that case, a student, you will have to pay tax on employment income. So yes, employment income may come. Employment income may come in this question. Yes. Secondly, individual may start a business. So if individual is doing a business, so in that case, students, he will be liable for trading income. His income will be trading income. So he may have to pay tax on trading income, right? So normally in this 15 marks, you sometime get pure employment income question, sometime you get pure trading income question, and sometime you get the combination of employment plus trading income. Employment plus trading income, right? Okay. Now, student, the benefit of this paper, listen to me very carefully. Many students get the knowledge of tax from this paper, and then they start working for different firms, different UK firms, because this is the time of outsourcing. This is the time of back office. Like, for example, in UK, different companies have to apply. In UK, obviously, they have to apply UK tax, all companies. So different audit firms provide them services, and these audit firms hire employees worldwide. Like from our country, in Pakistan, there are many of my students are giving services to UK entities. In India, I have many Indian students as well. My Indian students also providing services to UK companies. So after this paper, you get the tax knowledge, and you can apply it. You can file tax returns for your clients or different audit firms, right? Okay. So it's advisable to start working. Once you do it, start working and start getting experience and start earning, right? Okay. Now we are starting with in it's my routine since last many years that in my first orientation class, I start one chapter, one theoretical area. Now normally this is a 3 or 4 pages. If you see the BPP study text or Kaplan study text, this is your first chapter, and it is hardly 3 to 4 pages. And normally, believe me or not, believe me, normally students used to, this was the past practice of students, they used to think this is non-important area. This is not an important area. Like if you have seen F3 study text, in F3 study text, you seen the first chapter, introduction to accounting, what is accounting? So normally students ignore that chapter. But believe me, this chapter came many times in last 10 years. This chapter is very general. It's about F1. You remember the BT paper, your previous. It's about economics and all general discussion, but this thing even may come in exam, and it comes in exam. Okay. So that's why we have to give time on it, but it's very easy. It's all theoretical discussion. Now, first of all, you students, you all know there are 2 types of taxes, direct tax and indirect tax. There are 2 types of taxes, direct tax and indirect tax. Direct tax and indirect tax. What is direct tax? Direct tax is a tax which is applied on incomes, which is applied, whoever will earn income, he has to bear direct tax. For example, if you are doing job, your income is employment income. Yes, on employment income you have to pay tax. This is direct tax. If you are doing business, your income is business income. Yes, you have to pay tax on business income. That is also direct tax. If you put your money in the savings account, in the fixed deposit account, so you will get interest income. So on that interest income, you have to pay tax. Yes, that is also direct tax. If you invest in stock market, so if you invest in shares, you will get dividend. So on dividend income, you have to pay tax. This is also direct tax. So whatever tax is applied on income is direct tax. The second is indirect tax. Indirect tax is applied on consumption of goods and services. Consumption of goods and services, and the burden of indirect tax is borne by final consumer. Like if you might have heard about value added tax or sales tax. So if you drink a Pepsi or Coke, so for example, the price of Pepsi is $1 plus $0.5 the VAT. So $1.5 is the final price. So whoever will drink the Pepsi or Coke, he has to bear the burden, right? So indirect tax, this is very famous. Even you have studied in your basic studies. For indirect tax, the burden is borne by final consumer, and indirect tax is applied on goods and on consumption of goods and services, right? So first of all, just a recap of these two taxes. Now, the next thing, why government charges taxes? Why government charges taxes? Hope you remember the fiscal policy. Hope you have heard about the fiscal policy. You have seen in different books where money comes from and where it goes to. Where money comes from and where it goes to. Listen, for government, tax is the basic source of income. For government, tax is the major source of income. Major source of income. Tax is a major source of income. Okay, so government earns through tax, and then government spends. Then government spends on defense of the country, education of the country. Listen to me, construction of the country, for medicine, and for the betterment of the people of the country. So these are all the expenditures. So from one side, government collects taxes. On the other side, government, government spends. So now the question is, why government charges taxes? Why government charges taxes? Listen, there are three factors. The first is economic factors, second is social factors, and third is environmental factors. Economic factors, social factors, and the third one is environmental factors, right? Okay, now we'll start with the economic factors. We are starting with the economic factors. See, this is the discussion. See the first line. Through tax, government regulates many things. Through tax, government can control inflation. Through tax, government can control inflation. Now be with me, don't sleep. Hope you remember, hope you have seen this. Disposable income is equal to income less direct taxes. Disposable income is equal to income less direct taxes. Now take a basic example. For example, there is a guy who's doing job, and his income, his gross income is 10,000. And right now on this gross income, on this employment income, he's paying tax of 2,000, right? Direct tax of 2,000. So how much he gets at home? He gets a take-home pay. He gets a take-home pay of 8,000. He gets a take-home pay of 8,000. Now this 8,000 he can spend or he can save. He can spend or he can save, right? Okay. Now wait. For example, let us say suddenly government announces that the direct taxes will be increased. Now government doubles the direct tax. So previously this direct tax was only 2,000. Now government increased this direct tax to 4,000. Now use your brain. Now the moment government increased the direct tax, listen here. So as these direct taxes went up, the disposable income went down. As these direct taxes went up, the disposable income went down. And when the disposable income came down or went down, so for the whole public, their incomes are low. Their incomes are now low. So when their incomes are low, obviously now they can spend only few things. When direct taxes increases, when direct taxes increases, disposable income decreases. And when disposable income for the whole country decreases, so obviously now they can demand less goods. So overall aggregate demand of the country will go down. And whenever, you know the rules of economics, whenever the demands go down, obviously price level will go down. And once the price level will go down, inflation will be in control. So yes, government can control inflation through tax. See, through tax, government control the inflation. So these are the economic objectives which government achieves. See, through tax, government can control inflation. Right? Now, skip this first B point and come to C. Through tax, government can regulate any market. Yes. For example, if government wants to increase the stock market, government wants to attract investors towards the stock market, so government can announce tax cuts. If government says, now for the next year, there is 0% tax on stock exchange, so everybody will come to stock exchange. See, So through tax, government can shoot any market, and government can destroy any market as well. In past, we have seen in different countries, sometimes government increases the tax rate for residential properties. Sometimes government increases the tax rate for residential properties. So automatically people will run away from the residential properties. So the prices will automatically go down. So government can regulate prices through tax as well. Okay. Now the B point. Through tax, government can control supply of money. Hope you have listened this word in economics. Through tax, government can control supply of money. Now wait. You know, this is very basic thing. Whenever interest rate in any country goes down, whenever the interest rate in any country goes down, so people just run away towards money. What people do, they start taking loan, they start consumer financing, they buy homes because now the interest rate is low, the cost of borrowing is low, they start buying cars on lease and all. So automatically when interest rate goes down, people start borrowings from bank. So lot of money supply in the country, the money supply in the country increases, and people start buying more things. So automatically the aggregate demand goes up, because now a lot of money in the hands of people, right? Because the interest rate has gone down. But because a lot of money in the hands of people, so people will buy more. When people will buy more, so aggregate demand of the country will go up, so the inflation may also go up. So now what government does, government increases the interest rate. So now whenever government increases the interest rate, so automatically the cost of borrowing is high, so people run away from taking loans. So now less money in the market, less money supply in the market, so automatically inflation will be controlled. This is how economics work, right? Now what I have written, through tax, government can control supply of money. Through tax, government can control supply of money. Now listen, look at here. This thing I'll teach you during my course. Today is the introduction class, but I'm quoting the example right now. This is, let us say, Barclays Bank. Hope you remember, hope you have listened this name. This is a bank of UK, Barclays. And this is individual savings account. Listen, students. Okay. This is also in UK. If you invest your funds in Barclays, you will get interest income. If you invest your funds in Barclays, you will get interest income. But yes, on this interest income, let us say you have to pay 40 or 20% tax. If you invest in any private bank, if you invest your funds in any private banks, yes, you will get interest income. And on that interest income, you have to pay 20% or 40% tax. 20% or 40% tax, right? Okay. But if you invest in this account, this account is regulated by UK government. If you invest in this account, the returns are tax free. You don't need to pay any tax on this account investment. If you invest in individual saving account, you will be receiving interest income, and on that interest income, no tax. So just think, the whole UK people will automatically get attracted towards this individual saving account. So when all the people will be attracted towards this account, so people will invest. Listen to me. People will give the money to the government. So automatically the whole money of the city will come to the government. So automatically the supply of money will be under control of government, right? So yes, government just control the supply of money through tax. So yes, it is possible. So I have just discussed these first 3 points. Please, students, look at the screen and read it. Look at the screen and read it. Be careful. Now, the 4th point, through tax, government can control traffic. Yes, that's very common. You might have seen in different countries of the world, like in Singapore, I have seen this. UK, in UK, there is a very famous street, Oxford Street. Yes, So a lot of brands shops are there, and UK government wants to avoid people to come in car because already people walks a lot at that place. So if you just drive one time on that road, you will have to pay a tax like 30 pounds or 50 pounds. It's too much. It's too much. So automatically people don't come on that street in cars, they come by walk. So see, through tax, government control traffic as well. Through tax, government can control traffic as well. Now, through tax, government can motivate us for investments. Yes, this is very normal. You sometimes attract foreign investors through tax. You invite them and you tell them that come to our country and invest, and we'll give you a big tax cut. Okay, even in our course, I'll teach you this, that listen to me, sometimes you sell your existing assets, sometimes you sell your existing business asset, and if you take that amount to your home and enjoy with your family, government won't give you any relief. But yes, you sold your existing asset and you got some proceeds, and if you have reinvest those proceeds in another business asset, so you will get a big relief. This is the part of our course. So just think, through tax, government is motivating you to reinvesting. Government is motivating you to reinvesting. So these all are, my dear students, economic objectives. These all are, my dear student, economic factors. I haven't discussed the other two yet, but I've just discussed the first one, which is economic factors. So in short, to cut the story short, government achieves many economic objective through tax. Now let's move to the second thing, which is social factors. You know why government charges tax? Because one of the major objective of tax is redistribution of income. Redistribution of income, right? Like redistribution of income means collecting funds from rich and spending on poor. This is the best thing, right? Redistribution. So now, hope you have studied your previous paper, which is BT or F1. In that paper, you have discussed these three tax systems: progressive tax system, proportionate tax system, and regressive tax system. Now, what is progressive tax system? Progressive tax system means as your income increases, your tax rate also increases. As your income increases, your tax rate also increases. For example, giving you one example: 0 to 20,000, 20,000 to 60,000, and then 60,000 and above. It's 10%, 20, and 40. So that means for first 20,000, your tax rate will be 10%. The additional income between this band, your tax rate will be 20%. And if you're earning more than 60,000, so for additional income above 60,000, the tax rate is 40%. So this is an example of progressive tax system, right? What does it mean? I repeat, it means as your income increases, your tax rate also increases. As your income increases, your tax rate also increases. Okay. Now, the second is proportionate tax system. Proportionate tax system means same tax rate, not same tax. It means same tax rate. For example, if you are earning 100,000, let us say there is a fixed tax rate of 10%. So 100,000 times 10%, you have to pay 10,000. But if you are earning 300,000, now again you have to pay fixed tax rate, that is 10%. 300,000 times 10% is 30,000. So tax rate remains same. Tax rate remains same. Tax rate remains same, right? Amount of tax may change, but tax rate remains same. So I repeat, the first system, the progressive tax system. So the progressive tax system means as your income increases, your tax rate also increases. As your income increases, your tax rate also increases. Proportionate tax system means same tax rate. Proportionate tax system means same tax rate, same tax rate. And what is regressive tax system? Listen, as your income increases, your tax rate goes down. Now, this is very bad for poor people. This is very bad. So read this line. indirect taxes are tends to be regressive in nature. Indirect taxes are tends to be regressive in nature. Now giving you one example, listen. For example, my income is $100. And let us say I go to a restaurant to eat food. So whenever, or I go to buy a Pepsi, just take an example, I go to buy a Pepsi. So in Pepsi there is a GST or value added tax of $2. So I'm earning $100, and if I buy a Pepsi I have to pay $2. Now can you take out the percent? It's 2% of my income. That means I'm paying 2% tax as I'm earning $100 and I'm drinking Pepsi, and there's a fixed GST, there is a fixed VAT of $2 on that Pepsi. So on me it's 2%. Now there is a rich man, he's earning $1,000. He's earning $1,000. Now if this rich man goes to drink the Pepsi, that rich man also has to pay $2 because the GST is fixed. So now he has to pay $2. Now what is the percentage? It will become like 0.2% or something, 0.2% or something. So just see, as the income increases, income increases from 100 to 1,000, the tax rate is going down. As the income is increasing, the tax rate is going down. So that's why indirect taxes are regressive in nature. Indirect taxes tends to be regressive in nature. Indirect taxes tends to be regressive in nature, right? That's why in good countries they don't apply indirect taxes on necessities. Listen, think over it, because necessities are consumed by poor people as well. So it's good if you are applying indirect taxes on luxuries, because luxuries are used by rich people, so it's better. But on necessities, you should not, country should not apply indirect taxes, because necessities are used by poor people. And you can see with this example that indirect taxes tends to be regressive in nature. And what do you mean by regressive? As your income increases, your tax rate goes down. So there are three tax systems. Students, look at here: progressive, proportionate, regressive. Progressive means as your income increases, your tax rate goes down. Proportionate tax, same tax rate. Regressive, as your income increases, your tax rate goes down. Okay. Now there is one word which we called compliance cost. It is also written in the book, compliance cost. Compliance cost means cost in the form of formalities, time, etc. For example, listen, let us say you have to pay the tax. So what is the procedure? First, go to this department, take one form, get it signed with the 18th grade officer, then go to this window, then go to this, then this. So if there are a lot of formalities, lot of things to do before paying tax, so people will run away from this tax system. People won't pay tax. People say we don't have that much time for formalities. That's why now in this world, in this fast world, governments are going for one window solution, and government are going for online taxes. Like everything is online. You can file your tax return online, you can pay tax online. Why government is introducing these things? To reduce this compliance cost. Because my dear student, this compliance cost is one of the reason why people don't pay tax. Even they have money, even they are willing to pay tax, but when they say the compliance cost, the time consuming things, they run away from the tax. Okay, so don't forget. See, I've written here, lesser the compliance cost, more the taxpayers are. So we were discussing three factors. The first one, why government charges tax? The first factor is economic factor. Economic reasons I have discussed. The second is social factors. In this social factor, we discussed the redistribution of income. We discussed the three types of taxes: progressive, proportionate, regressive. And now finally the environmental factors. Listen, through tax, government control the environment. Through tax, government can control the environment. Government can control the pollution, right? Even nowadays, very famous thing is climate change. Climate change is hitting the whole earth. You can see in developed as well as developing nations. So all the governments are working on low emissions or zero emission cars. So now just you think, let us say if you buy, let us say government can make a policy. If you buy a car with high CO2 emissions, so you will have to pay a big duty, a big tax. And if you buy a zero emission car, or if you buy an electric car, that means now you are good for the society, you are good for the environment. So government may say you that don't no need to pay any duty, no need to pay any tax, government can waive your tax. So see, through tax government can control environment as well. Through tax government can control environment as well. Through tax government can control environment as well. Now the last topic of today's class, these two words are written, these two words are written on in your book, and it has been examined many times. Tax evasion and tax avoidance. Tax evasion and tax avoidance. Now what your book says, tax evasion is illegal way of tax saving. Tax evasion is illegal way of tax saving, and if you are caught, if you are caught by tax department doing tax evasion, you will be penalized or you will be punished. You may be punished, right? What is the example? Example is hiding your actual income. For example, your real income in this year is 10,000 pounds. Your real income in this year is 10,000 GBP, 10,000 pounds. But you disclosed only 4,000 pounds to government. That means you have hidden 6,000 pounds. So this is illegal. This is illegal. This is total. This is pure tax avoidance. This is pure tax avoidance. Sorry, tax evasion. And this is illegal. Second, overstating your expenses. You know, a businessman pays tax on profits, and how profit is calculated? Revenue less expenses. Revenue less expenses. So now just think, your real expenses are only 1,000. Your real expenses are only 1,000, but you overstated your expenses and you reported 4,000 expenses. So just think, when you increase your expenses, your profit will go down, and when your profit will go down, your tax will go down. So this is also illegal. This is also harmful, right? Now what is tax avoidance? Tax avoidance is basically legal way of tax saving. Legal way of tax saving means if somebody caught you doing tax avoidance, nothing will happen to you. It's not bad. So example is using individual saving account for investment. Listen, I told you, if you invest in any private bank, if you invest in UK in any private bank, so you have to pay 20% or 40% tax on interest income. 20% or 40% tax on interest income. But if you invest in this ISA, what is the full form of ISA? Individual savings account. If you invest in this government account, individual savings account, this is tax free. So yes, you can save tax here, you can save tax here, and this is legal. This is legal. So I repeat my statement. Tax evasion and tax avoidance both are tax saving tax techniques. The first one, evasion, is illegal, avoidance is legal. If you caught doing evasion, you will be punished. If you caught doing tax avoidance, no punishment, nothing. And I have given you the examples as well. I have given you the examples as well, right? Now, my dear students, finally, I would like to say this is your first orientation class, and I'm very motivated, very excited to welcome you on board for our institute. And I would say, study with motivation. Please, if possible, be part of this high achiever list. This high achiever list, and these are also normal people. When they can do, you can also do. We also conduct the revision days. We give you normal course. We will also conduct routine test. We have a proper testing department. So we welcome you to avail all these facilities, and take care. Thank you. Allah Hafiz.